Hey YouTube, this is Bitstream coming to you with another profit trailer update centric video. Thank you for joining me so much today. I do appreciate it. Today we're going to be talking about some updates. I know it's been a while since I posted a video, probably about a week. I've been getting some other things squared away in other aspects of life, but I have made some significant updates to profit trailer, namely adding some coin to trade with, and obviously I've been playing with the settings and everything, and a lot of has changed in the market as well. So I do want to go over some of those changes, take you through the results from my 1 minute chart style trading, the repercussions of that and everything. And I'm also going to take you through where I think Bitcoin is headed based on some technical analysis, update you on some new tools that I implemented as far as testing my strategies and different ways of trading that you can also use yourself. Hopefully I can remember to post the links to those items for you. And I'll also show you how to install those tools so that you can use them yourself and where to find them, because I had a lot of questions regarding how I get some of the indicators that I get and everything like that. So we'll go through that. And before we get started today, I do want to remind you, please support the channel by subscribing, liking the video, and sharing it with your friends and family or your circles. Please help spread the channel and help the channel grow in those ways. The more subscribers and the more interactions that I can have, the more time that I'll be able to dedicate to making these videos and bringing cryptocurrency trading to the world. I think this is a fantastic opportunity and a fantastic time to get involved in this stuff. So the more notoriety that I have, the more we can spread the word, the better. So please like, share, subscribe, do all of that stuff with the video, and let's move forward. And I'll try to be as brief as possible today. I do tend to get a little bit wordy, but this is probably going to be a longer video, so please be prepared for that. I do apologize. I'll try to keep it as brief as possible, but we do have a lot to go through in this particular video. So without further ado, the first thing I'm going to do is update you on what I've got going on with Profit Trailer. So you can see up here that I did add some coin to the bot. I probably added this about 3 days ago. We added about $2,000. At the time, Bitcoin was trading around $9,400, so we picked up some and added it to the bot. Then that was put us at about 0.26 or 0.25 Bitcoin at the time, something like that. So you can see that's where we have these higher balances before. Prior to that, I was at 0.04 or something like that, 0.05 or 6. I can't remember. Just check the old video. It was like $400 worth of Bitcoin. So now we're at about $2,900 to $3,000 trading with the bot there, and that has added some extra flexibility that I didn't have before. So I had to adjust some of my settings. So we'll go through my settings so you can see where I'm at now. The trading strategy is pretty much the same, but some other settings I adjusted to adjust for the larger amount that I'm trading with. So we'll go over my logic behind that. And you can see right here, we've had a pretty good week so far. So this number is probably as of maybe 3 or 4 days ago. We had a very good day yesterday and also a very good day before that, which you can't see here. And today is actually pretty respectable. Now, I'm very happy with these numbers, especially in light of what I've seen from results from other YouTubers. There's some YouTubers that were pretty much zero over the weekend because Bitcoin had been rising so much. And as the traders pretty much all know, when Bitcoin rises, the altcoin market isn't doing as well. So you can see here the difference. Bitcoin is up 5.72%. In the same time period, the altcoin market is only up 3.11%. Now you're trading with your base pair in Bitcoin. So for you to make money trading with your Bitcoin as your base pair, your altcoin is going to have to do better than Bitcoin for that trade to go off. And you can see here we're doing worse, and it's been that way for the past couple of days. So that basically, this is going to mean that there's a lot of bags out there, and that's exactly what I've seen from a few other YouTubers. And you can see during that same time we've actually been trading. So I'm gonna go through why I think that is, and why I think the strategy is it's not perfect, and it's not the panacea. It's not the end all be all, but it is leading to trades in a market that's worse for altcoins in that scenario. So I'll go through that with you guys. We can see that I still have some coins loaded in my possible buy log. I do have more coins that I'm allowing to trade now. Now that we have the higher balance, so I'm able to kind of widen that a little bit. So I loosen the reins in one area and tighten them in another to kind of adjust. So I'll go through that, but we do have a few more coins. I was trading with only like 30 pairs. Now we're at like 50. So basically all I did was I took off my whitelist and I adjusted my volume to be higher than 100 Bitcoin trading to kind of weed some of that out. And then my safety measure is my spread. So my spread is still 0.75%. We'll go through all of that real quick. And then my DCA log, actually, let me go to my pairs log first. And forgive me, my computer's really slow, so forgive any kind of pauses there. But we can see we're sitting on NEO. We've been sitting on NEO for a little while. It's been really, really sideways, but it hasn't DCA'd. And from my memory, it hasn't really come close to DCAing. But it's just kind of sitting there sideways. So, eventually we'll catch a pump in NEO and then we'll be out of it. And then we'll have a little bit more room to trade. Right now, it's not trading any of these coins because I have a buffer that it has to leave 40% in Bitcoin or it won't trade any new pairs. And we've hit that buffer. So it's kind of sitting there. And I do that to leave room for DCAing. When the coins need to go ahead and DCA, they have the Bitcoin sitting there to be able to do that. So we're not trading any new pairs. So once I get rid of this NEO and maybe one of these bags, then we'll be able to do that. So here's our bags, and they're not terrible. They're all mostly within striking distance, a reasonable striking distance. I would consider anything under like 7%, a reasonable distance. I've got two of them that are below that. This SNT, I'm probably going to ban that particular coin because that one has not traded at all. I think all of these other ones, save for these two, have all traded out before. But this SNT has just been a slow bleed down every single day since I got into it. And I don't like it. So I might just go ahead and take the L on that. But based on the chart, I might give it a couple of days, but we'll see. But that's the only one that I'm really unhappy with the performance on. All of these others, especially this one right here, this DigiDio coin, is my favorite coin to trade. This is going to be a nice fat trade when we catch a pop on this one. And then obviously you got Cardano. It's having a tough time right now. And then the rest of these have all traded out before. So we should be fine there once the altcoin market decides to catch up to Bitcoin. But that's where we're at with that. Our sales log is very interesting. We've had some really strong trades over the weekend. And we'll see if I can show you a few of them. So we got rid of some bags. So you can see right here, we got rid of a bag. I think this is the same trade. It just, had two different executions for whatever reason. But, we're clearing out bags. So these are all in our DCA log, sitting there for a few hours or maybe a day or something like that. And then they randomly, clear out every once in a while. So this was a 3-bagger. We had a 2-bagger right there. This was a bag that was sitting there for a little bit. And then my computer's probably not going to cooperate the way I want it to cooperate here. But there were a couple of nice trades in here. Like we've had a trade, that was 5%. I think that was this morning. Um, oh yeah, there's a nice. Look at that, almost 10% in that one trade. Um, and my settings are the same. It's just looking for a 1% gain, or I think like zero point 0.9 with a 0.2 trail or something like that, or zero point 0.8 with a 0.2 trail. But we caught almost a 10% trade in this particular coin, and we got 288 out of that. And this is not even a bag; it's not a DCA. There was another trade in here that we got $7 for that particular trade, and we're only trading basically $30 at a time. In US dollars. You can see some of the bags. This is another 3-bagger that we got out of. Some more 3-baggers, a 2-bagger right here. There it is. So this particular trade, this is a 3-bagger, and it went up 3% and got us $7.60 out of that one trade. That's 68,000 Satoshis that we got out of that one trade. That's very, very good. And you can see we held on to this bag for at least a day, probably longer than a day. So, the bags, if you get the right coin, these bags are going to clear out, when the altcoin market catches up, or just when that coin catches up. There's some digi. The bot loves to trade that coin. But that's going through some of our recent trades right there. So we had some really nice trades go off that I was very happy to see when the Telegram bot picked up on them. So it's doing its job. It's doing its thing. I think it needs a little bit of patience. And I can definitely tell you with a higher balance, it's easier to be patient. Because when I had, $400 in there, $300 in there, and you get 2 bags and it's eating up your entire balance, it's really hard to be patient because you feel like you're sitting on the sideline where all the other kids are having fun. And you're just sitting there twiddling your thumbs in timeout. So it's very tempting to want to, take your loss so you can get the trading again. And there's some logic to that, right? I'm thinking about that for that S&T. But, since I've got this higher balance, I'm much happier sitting on bags for a little while to allow the market to play out, because I'm actually still trading. So like I said, once this Neo clears and maybe one other bag clears, we'll be back to trading again. All those trades that you saw were with me sitting on like 8 or 9 bags. Now they weren't like triple DCA'd at the time, but I was sitting on like 9, maybe 10 bags while those trades were going off. So just something to keep in mind. Higher balances, I think, are going to be more advantageous to the style that this trading bot can give you if your strategy is to trade a lot of pairs. And I like to trade a lot of pairs because I believe in diversification, because you don't know what's going to hit and you don't know what's going to miss. But I think that you have a better chance of getting winners if you're trading more pairs, right? So I could be totally wrong, but there it is, and there's the results. So let's actually go through some of my settings so we can take a look at that. Sorry, I kind of hate it when people drink on the mic, but I was thirsty. So, all right. So you can see right here, I kind of disabled my whitelist. It's mostly trading most of the whitelist anyway, but it's added some pairs. I did turn off this coin. I can't stand that coin. It gets on my nerves. But I'm probably going to turn it back on at some point, because I think this coin had a big pump. And I'm going to wait for it to fall back down to closer to reason before I turn it back on. This is a change that I made. So I was trading with the nominal all max cost value. I changed that to 1.1%. And I can play with this number right here. So this number probably gets me around $30 something per trade. I edged it up because I just wanted to I started to feel like a little teeny bit more comfortable with my strategy. So I wanted to give a little bit more to the initial trade, so that we can get a little more out of our quick hit trades. So this is a good number to kind of play with once you get a higher balance, in my opinion, to play with the amount of pairs that you're trading and all of that. This is where I've got it set to leave 40% of my balance at least in Bitcoin. So this is set to give me plenty of room for DCAs. So I've got room to DCA if I need to. Now it's not perfect. I still use that spreadsheet from the known community. So I'm overextended by a little bit, by a couple of pairs, but I'm okay with that. So I can't fully DCA everything if everything needs to fully DCA. But the way I think is, I would just take a loss at that point and then reset some coins to give me some more room. Volume, excuse me. I thought it was 100, but it's actually 200 per coin. You could play with this to get, filter out your coins a little bit more if you want to. Trading pairs. So I've got this set to 11. Now I could just take this off technically, and this would kind of take over at that point, but I still want to keep this at 11 just to keep another check on my trading so that I'm not overextending myself. So I've got a couple of different filters there. This is my max spread, still sitting at 0.75. And in my buy strategy, I've actually got it set to 1.1% down plus a trail of 1.2. So really, we're looking for negative 1.3 to go ahead and buy. So we'll discuss that once we get over to the charting portion. But this was in response to how I was trading when I first added the money. It wasn't stringent enough for me. So I wanted to drop this down because we were just trading one after another. And I don't know if that's just a result of the market that we were in or what, but it was just trading like crazy. So I wanted to slow that down a bit and be a little bit more picky on our entry points. So you can use this number right here, to kind of modify that and be more and more picky on your entry points and get better executions on your trades with that number. And our sell strategy is still the same. So we're looking for a 1% gain, and we'll settle for, 0.8. And our DCA, enables at 2.25. I'm trying this pending order wait time thing. I'm not fully sure how this works yet, so I'm kind of testing this out, but I've got this set for a couple days out, so I'm gonna see what happens. I think it's supposed to go ahead and put a pending order out to sell once a bag has been sitting there for a certain amount of time. So I'll see how this works out for me. Let's see what happens, and I'll report back. This is kind of helpful for the way that I like to trade. I've got a price drop trigger on Bitcoin. This was helpful when over the last week when Bitcoin was dropping like a rock. It will put in a sell only mode when it drops by at least 6%, and it won't start trading again until the price drop recovers up to down 4% at least. So I think this helped me stay out of some bad trades. So I was pretty happy the way that I trade, how this interacts with everything. I don't have it on the way up because my strategy, I'm actually, I like kind of getting into coins when Bitcoin is rising because I think the altcoins are going to catch up afterwards. I could be wrong there, but that's my hypothesis right now. And in my individual coin settings, I've been playing with this a lot, trying to lock these down because my buy value doesn't work for all of the coins that I want to get into. So, for example, Cardano is not as volatile as a lot of other coins. So I've got that one to be much more shallow, much more closer to the average. Same with Neo. It's not as volatile, as a lot of other coins. Same with Dash. And then some coins I think are more volatile. So like this XVG coin, I don't want to, not trade it, but I also think it's more volatile, or I just want to be more careful with that particular coin. So I got the buy value set to be much more further down than the other coins. And I'm still messing with this every day as I get to know the coins that I'm trading. And then, these coins, I got these coins turned off right now. I want to stay away from like nano and stuff like that for the particular time. And I'm still wavering on salt. Salt was my last headache coin. I went ahead and turned it back on for now, but it hasn't really been trading salt, so I'm fine with that for the moment. But still kind of like looking at it. And some of the other stuff that I have down here, just coin specific stuff. And then Ethereum and Steam and all that good stuff. Because Steam, I do want to trade Steam. So I had to set some specific stuff for Steam because it doesn't meet some of my other criteria. So I had to set specific settings for Steam and Ripple. Ripple is actually a pretty good trading coin if you set it right. So I've made a little bit of money on Ripple as well. So there's my pairs. DCA, I played with it a little bit. So basically what I did is I went down to 4 DCA, and then I upped my DCA levels a little bit because my thought process there was that I have more coin, so I can DCA a little bit earlier and hopefully get out a little bit earlier. It may not play like that because if you get caught, in a downward avalanche, you're just buying the avalanche. You know what I mean? But I think this is, okay, and it's kept me in a reasonable range for the most part. And honestly, if your DCA is spread too far out, it's going to be harder for you to get out of the coin anyway. Because what you have to look at with DCA is you're going to need the coin to improve by half as much as your level is. So in other words, this 10% level I have right here, if I catch a 4 DCA, a 4 bagger at minus 10, then the coin is going to have to go up by 5% for me to exit that, actually 6% with my profit settings to get out of that coin. It's going to break even at 5%, and then it's going to have to go up a whole another percent for me to get out of it. So you have to also consider that if you're going to DCA. So just know how that works. Like this right here, 25, that means it's going to have to go up like 13 or 14% if it was to ever get down to a 6, which I have to turn off right now. But if it were to get down to that, it has to go up by like 13 or 14% for me to exit that trade. So that's just something to consider. How far down do you really expect the coin to go before it just gets ridiculous, and you just have to cut it. Because even if you DCA down here, your chances of it going back up another, 14%, you got to be realistic about how long that's going to take and what that's going to look like. But I just haven't deleted it because, I just turned it off there. Same sell strategy. I'm thinking about implementing a stop loss trigger for those reasons. If the bottom drops out below 10%, a person like me is probably going to drop out anyway. But yeah, I don't know. So I'm still wavering on that. And then my indicators, right here, I went ahead and typed out some different indicators because I think that the way I trade works best in different market conditions. So I just commented in different indicator time periods, just because to make it easier, because sometimes I log in from my phone and I don't feel like typing on my phone. So I just kind of have it here so I can just delete the hash mark. But I think 60 seconds for me, 1 minute charting works best for most of the time, but there are time periods where I think, a 300 or a 900-second time period might work better. And usually for me, is times of low volatility. So if the market's very quiet, I might boost it up to a 300 or a 900. But for most of the time, it's usually fairly volatile or volatile enough to where we can catch some trades on the 1 minute time period. But like I said, if it's a quiet market, if it's a very shallow or stable market, you might want to go for a 300 to 900 and catch some longer term trades. So there's that. And also I have this 3 set here because I'll show you in the chart, but when you're looking at moving averages, the shorter or the smaller this number, the harder it is for the coin to kind of escape the gravity of the average. So I'll show you what I mean when we get to the charting. So now let's look at some Bitcoin analysis. So this is a chart of Bitcoin. This is a daily chart, so every bar represents 1 day. And we can see the past couple months right here. We can see the rise and the fall and everything like that. So what I went ahead and did is I charted some trends on this particular chart so we could see all of our different trend lines, all of our different possible support and resistance areas. And then I'll put the Fibonacci retracement right here. That's what these colors are. So these are retracement areas, and the green line right here is the 50% retracement mark. So that is showing from the very high, the highest point that Bitcoin got, all the way down to the lowest point, which was actually right here in the recent trend where Bitcoin got. So what you're looking for in the Fibonacci is retracements between the high and the low. And I don't have time in this video to kind of get into why the numbers are what they are, so you can look that up. But what I do find intriguing based on where we are right now is there's basically 3 or actually 5 different major support and resistance lines in play, in my opinion. And the most important one is this big red line coming down right here. So this is traced all the way back to the high in December, all the way back to the high down to today. And that's based on that high and then the other high after that when Bitcoin retraced after the first drop. So when you connect those two, you have a very, very strong line of resistance that could come into play very soon. You also have this support line down here, which we kind of almost got to and bounced off of during our latest our big low that happened a couple weeks ago. So we didn't touch it, but this is based off of the previous lows that we had prior. So the last major low way back in September of 2017, you've got that, and we touched that again here at this point. So you got that establishes a major support line. When you're talking about lows like that, those are big lows. So you've got that to factor in. We bounced right off of that, and that established that trend line. And then you've got this other kind of diagonal line coming through from some other less major lows that could potentially act as a more recent support area if we fall back from this point. And then we've got the recent uptrend. So this diagonal line, as you can see right here, is establishing our more recent upward trend that's getting everybody excited and everything like that. And then we just fell out of this other small channel. You see these 2 parallel lines right here. We just fell out of this small channel, which isn't too surprising. This is very, very vertical. We just fell out of that channel with the recent down day yesterday to kind of take us out of that channel and into the wider channel here. So what I want to point out is we are very close to several key areas of resistance and very thick areas of resistance ahead to where Bitcoin is going to have to make a decision whether it's going to continue downward or start really committing to going upwards. So here's what I mean. So we're sitting at right just over 11,000, and we've hit that mark 3 days in a row. Okay, so we were going up, and then bang, kind of hit our heads on this 11.1 area. So why did we do that? So number one, if I zoom back out here, we've got the Fibonacci area. So let me zoom out a little bit more so we can see this is where we are. This line right here, this line is very close to this green line on the Fibonacci. Okay, so that area is the 38.2 Fibonacci retracement. So that is a 38% retracement from the low to where we are now. Okay, from the high to the low, we've retraced that downward move by 38%. That is a Fibonacci line, and we have just about hit our head on that area. Okay, we haven't quite gotten there, but it's very close. Okay, so that is a resistance line. That's a resistance area where Bitcoin is considered to be possibly in some minds a good profit taking area, a time to say, okay, I rode the bottom out, now let me go ahead and sell. We also are getting very, very close to this red line. Okay, this red descending resistance area. We haven't hit it yet, but you know, we're starting to shy away from the upward mobility right around that 11.1 area, right? Now we still have some room, I think up to like 11.5 if it's going today, but I don't think it's going to get up there today. But we still have a little bit of headroom, but that area is looming. So there might be some people trying to get ahead of this big resistance line right here. Okay. So those are two key areas of resistance that we have right above where we are that we're going to have to test and break through to have some upward conviction to give us to power higher. And let me zoom back in here. So if we don't do it today, which we probably won't, if we don't do it tomorrow, if we don't do it the day after, we've got only a couple of days before we're going to have to decide which direction we're going to go. And we're not out of a bear market until we can break this red line and stay above this red line. So we might test above it and test the waters and peek our head above it a little bit. But until we can convincingly come out of this red line to the upside, we're still in the bear market, folks. And we can be in a bear market all the way until this convergence right here, which is not until April or the end of March. So if we test this line and then retreat from it, you could be looking at a bear market all the way until the end of March based on that trajectory if it doesn't like this red line. Now, if we're going to continue our upward trend that we established lately off of the low, then we only have a couple of days left to prove that we're going to do that. And we're going to have to break this red line right here to do it. Okay. So we're going to have to make that decision by February 23rd, whether we're going to keep on this upward trend or not. So we're coming to a crossroads, but we still have a couple of days for Bitcoin to make up its mind what it's going to do. So it could play around anywhere in here, but you're probably not going to see a Bitcoin above like 11.5 until it makes a decision as to what it's going to do. All right. And that convergence is, like I said, on the 23rd. It needs to make a decision. Either it's going to continue downwards, most likely, or it's going to continue somewhere upwards. It doesn't mean it has to maintain this trend because this is a very vertical trend. But I think that if we start staying above this more shallow line right here, then and we're on the other side of this red line, if we're on the positive side of this red line and we're also above this green line, then we are convincingly in a bull market at that point. But until we prove that, we're still in a bear market, just like we were in a bear market during this rise. We were in a bear market here. We're in a bear market here still, right? Because you have lower highs and lower lows. So this right here is still a lower high. It's lower than this high, lower than that high, lower than that high, lower than that high. This lower low, lower low, lower low. When you have lower highs and lower lows, you're in a bear market. Okay. So what you're looking for is you got to break this red line, and you have until here to decide which trend you're going to go on. So if you break this green line, this well-established green line right here, then you're in trouble. Okay, but not until then. You're not in trouble until here, in my opinion. Okay, but we got to break this red line to be considered in a bull market, and I mean convincingly. I'm not talking about peeking your head over it. Okay, so I think we're gonna chop. I think we're gonna chop for a couple of days while Bitcoin decides what it's going to do. All right. So don't forget, if we can still ride this red line, we can still ride anywhere in here and still be okay. But if we do, I mean, you got to watch the news, right? And I don't mean watch the news for information. You got to watch it for sentiment, because the news kind of drives emotions, and emotions drive markets. So right now we're starting to get positive stories about Bitcoin again. Oh, Bitcoin, cross above 10,000. Now it's at 11,000. People are counting down, and then they're going to be like 11.5 and blah, blah, blah. So you're starting to get some positive sentiment back into Bitcoin, which could power us higher. But you just have to watch it. Okay. So with that being said, with Bitcoin chopping back to profit trailer, what I think is going to happen is Bitcoin is going to stall out for the next few days in this area. I don't think it's going above like 11.5 for the next few days. And I also don't really think it's going to go below, say, 10.1 or 10.15. So I think it's going to trade between 10.1 something and 10.5 something for the next few days until it decides on a path. And I think in that particular time frame of rest, then the altcoins are going to catch up. Okay, the altcoins are going to have a chance to catch up, or anyway, I don't know if they are, but they're going to have an opportunity to, because all of that buying in Bitcoin usually leads at some point to people jumping into altcoins. So they're going to be buying altcoins and selling their Bitcoin in exchange for some of the altcoins that they got out of here, right? So they're going to be getting into the Cardanos and the Verges and all that kind of stuff again, and that should power the altcoin market in comparison to Bitcoin. So the altcoin market should catch up. And the way that we trade, since Bitcoin is our pair, we want the altcoins to rise in comparison to Bitcoin. So that should be good for altcoins in the next couple of days. Doesn't mean it's going to play out like that. That's just what I think is going to happen. So there's that. Bitcoin analysis done. Now, let's talk about some of our indicators that we use with the bot. I think I've already made clear why I use EMA gain, but I might touch on it again. But I wanted to show you some indicators that you can use to back test your bot. You can see what your bot is looking at and see what your bot is kind of seeing yourself. So you understand how the bot is trading, and you get to see whether or not you like the entry points that you're getting on your particular strategy. So what I have loaded up here is our SMA gain strategy. So this is our SMA gain indicator, and I'll show you how to get access to this particular indicator. But what you're looking at, this is on a 1 minute chart, and this is on DGD BTC. So Digix, Digidio, I call it for whatever reason. So I've got my strategy kind of loaded up here. It's not fully my strategy, but close enough, right? So what you're looking at, first you have your two moving averages. Let me see if I can zoom in a little bit and make it more clear. Come on, cooperate, computer. All right. So you've got your two moving averages, the green line and the yellow line. And then you have the red line, which is basically your buy line. So when the coin touches this line, that is a buy signal. Now, this does not include trailing, so it doesn't account for trailing. So you kind of have to eyeball that. But this is where the bot is really going to be looking to actually buy. Now, if your strategy is like negative 0.5 and you have a 1% trail, you have to make sure that you add those two numbers together, because your bot isn't seriously going to buy until it meets both of those numbers put together, right? So what's going to happen in reality is that your bot is going to actually look to buy. It's going to start trailing, and then as soon as it trails down enough and then recovers by your trail amount, then it's actually going to place the order. Okay, but this is close enough. So when you see these neon green areas right here, that means that's the candle that it's going to buy on. Okay, and then this dark area right here, this dark line, you can just ignore that. It's pretty much just to stop the green from going all the way down. So let's zoom in a little bit and examine. So what you can do here is you can plug in your actual strategy right here, your candles, your fast and slow line, and your gain number. You can plug it in right here, and then you can back test and see if you like the trades that the bot would have gone into. So we'll start with this particular trade. We would have bought, we picked up a signal right at the bottom of that particular bar, so we probably would have bought maybe like right here, I'll give it, and then just measure and see would you have gotten out of this trade. So this coin got all the way up to like 1.7% in the next minute. This is a 1 minute chart, so we would have been in and out of this trade in a minute if the bot would have picked it up that fast. I don't know how fast it works, but probably would have been out of this particular trade within a minute, if not 3 minutes or 2 minutes or whatever. And I can tell you in practice that yes, the bot can do that, because it has done that. I've seen it, in and out, in and out, in and out like 3 times in just a few minutes of the same coin. So that's how you can kind of back test it. You can see, here, I don't even have to measure that. You would have been out of this particular trade, either one of these, within a few minutes. Is like 7 minutes or something like that. This particular trade, you would have been out, if not in 1 minute, you definitely would have been out right there a few minutes later. This particular trade, now this could be a tougher one, so let's take a look, right? So usually what I like to do is I like to just find, a good portion above the bottom of the bar if it's below the red line, and just find a good spot like, I don't know, midway through or something like that, and measure up. So where are we at? So this guy here, and then maybe up here. So we probably would have been out of this trade within 8 minutes or whatever that is. Okay. Here's another one. This one's a little bit tougher. So these are those waterfalls. So I know the people that actually trade profit trailer hate these, right? So you got these slow kind of 45-degree angle drips, but this one's actually better because it's more volatile. But sometimes you get it where it just dies and just bleeds down like a slow avalanche. But let's say we caught this first candle right here. So let's say we caught it, somewhere around here. Okay. And would we have been out? Ooh, it's going to be close. It's going to be close. Yes, we would have been out within 15 minutes of this particular trade if we caught it. Okay. Same down here. If we caught this one, you would have been out in 1 minute. This one, if you caught this candle, you would have been out at least on that candle. So it's looking good so far. Let's say this one probably would have trailed down to, I don't know, right there, something like that. This one would have been close, because we may or may not have gotten out of this one. That's about a 1% gain. But you might have been gotten out of that one. This one, you definitely would have been out of that one. Now you don't even have to measure that one. And this right here, this line right here, this is why I like the 1 minute charting. Okay, so this is just a quick example that I came across. So this particular candle, this is a very red and bad and sharp down candle in the middle of a nice strong uptrend. Okay, so I haven't seen other strategies, with the exception of maybe low BB, that would get you into this trade outside of EMA gain or SMA gain or whatever, right? And if you're in a wider view, like if you're in a 5 minute or a 15 minute chart, you also probably wouldn't have caught a trade like this, okay? Because what has to happen is the coin has to escape both your long and your short EMA line. It has to escape the gravity of both of those lines in order for you to enter that trade. Okay, so you're not going to catch uptrends in those cases, and I'll show you examples of that later. But you know, in this particular way of trading, you would have caught this uptrend right here. You just would have caught a bad trade or a bad candle in a good trend. And that's kind of like what they say about real estate, right? You want to catch the worst house in the best neighborhood. So this is like the worst house in the best neighborhood in that case, right? So you're kind of catching the coin on the way up, just a bad candle in there, right? So I love that. Right here, you definitely would have been out of that trade. So far, we don't have a trade that we wouldn't have been out of. We haven't even DCA'd a single one yet. So let's take this candle right here. This one, you would have been trapped. I can look at that and tell. So this candle is not enough to get you out of. The only thing that would have saved you is maybe your trail. If you could trail it down enough, you might be able to get out on this candle, but I doubt it. So you would have DCA'd this one, but you would have only DCA'd once. So let's say you DCA down to 3% or something like that. Actually, my DCA is lower than that. I think mine is 3.5, so I still would have been stuck. But let's say you DCA down to like 3% or something like that. What you're looking at is your break even is actually going to be halfway between your buy and your DCA. So I don't know if you can see the dotted line in the middle of that gray square, but that dotted line would be your break even. And above that would be your profit, and you would have to meet your sell criteria above that profit, right, for you to exit that trade. So that's what you're going to have to look at and calculate and see if that's enough. So we can see that our break even on this particular coin, if we bought down to like 3%, if we DCA'd at like 3%, we would have had to have like 1.5% gain to break even, and then 2.5% up there to actually sell the coin. So our break even, I can just look at it real quick, and we are right about there. That's our break even ish. So if we DCA, then we still would have been in the coin, but that's okay. You know, we would have got out right there, so that's fine. So that's our first DCA, but you can see you're batting like your win ratio is crazy, at least on this particular coin, right? It's not going to be the case for every coin, but in this coin, your win ratio is just really, really good. And let me see. So here's a waterfall. It's these that I hate. These right here, these slow drips, like at a 45-degree angle down. I hate those. So we probably would have caught a trade right up around here, and we would have been stuck in here and DCA down. I really haven't found much that you can do except for have a longer time period to kind of avoid these. So that, I want to be real, is the downside of this particular strategy, is that you can get caught in these, right? But it's not that bad, you know, because then you DCA out of it eventually, hopefully. your DCA out of it, right? That's what your DCA is there for. But you can see after that, there was like 5, 6 successful trades that you had without DCA that you would have gotten out of in minutes. So I like it. So let's compare that to, let's just say, a 15-minute candle and then see where we are. So you can see, first of all, there's a lot more trades going on, a lot more signals being picked up on. And that's because it's easier for the coin to go above and below average, because on a 1-minute chart, this 24 and 12 represents 24 and 12 minutes. On a 15-minute chart, this represents like a whole day, right? And then like half a day or something like that, whatever the math is, right? So you're going to get a lot more signals. So what you have to do to compensate is you have to blow out your buy value. You have to blow that way down. So instead of 1, maybe you're looking at like a 5. And if I hit tab, it should update. Okay, so that's too strong, most likely. So maybe we'll drop that down to like a 4 and then see what that does. Okay, so we're getting some signals, and that's what we want. I'm looking for the sum. I'm not looking for a lot of signals. I'm not looking for no signals. I'm looking for that point where we just barely start to get some signals, or to the point where, maybe we'll make a few trades every couple of hours or something like that at the right times, at the right spots of the coin. You don't want to just trade every hour and then half of those trades be bad, right? So what's most important is that you're making good trades. The second priority is to make sure that you're trading enough to make it worth your while, right? So maybe we'll pop this up a little bit. Maybe 4.2 is the right number or something like that. Maybe 4.3. And you can just play with it until you get something that is right for you. So we're just going to stick for this for now and see how we do. So I can see that we've got some trades right here. Got a trade right here. We still would have been stuck in this particular trade that we just saw. So if you blow out your buy value enough to avoid this, actually that might not be so bad, because we have a recovery right after it. So you have to look at the different scales and understand kind of what you're looking at. So I'm kind of used to looking at like a 1-minute chart. So this would be like a 0.5% on a 1-minute chart, but on this particular chart that could be like 5%. So let's see. So let's say we enter this trade right here. So yeah, so that's like 2.5%, right, on that particular candle. So you do have to keep that in mind. So you would have been out of that trade. That would have been fine to buy at the top of this drop right here. Same thing right here. You would have been out of the trade, on this particular candle. This one, you would have been out of the trade within, like an hour or 2 or something like that. Would have been out of the trade here. So it's not that 15 minutes doesn't work. It works just fine, and that's why I also use it. You saw that I have it sitting there in case I want to use it. But what it does do is, number one, you can see on these uptrends, I'm not getting any signals. Not getting any signals on these uptrends whatsoever, because it rarely on an uptrend ever, even when it dips down, it doesn't dip down below the moving average, right? Even here, it doesn't dip below the moving average until it's a downtrend, right? This was about to turn into a downtrend. It just happened to turn around. So that's why you're getting a signal right here. Look at all of the negative energy that had to be expended for it to reach our buy value, right? So a lot of negative energy, and it just takes a while, right? But it's way more conservative. It's much, I don't want to say, well, maybe I do want to say safer to trade on like a 5-minute. I thought it was a 15-minute chart. I'm tripping. So it's like, this is a 5-minute chart, right? So it's safer to trade on a 5-minute chart using this strategy and blowing your buy value way down, because all of the negative energy, by the time it reaches your buy value, it's going to be exhausted from going down, and people are going to start to see, oh, it's cheap, it's valuable, down here. It's on sale down here because all the negative energy, all of the sellers have expended all of their energy just to get to your buy value. And that's what you're looking for, right? But the trades, in my opinion, that I want are going to be few and far between. So for me to, for example, catch this particular trade on a 5-minute chart, my buy value is going to have to be like 0.5%, maybe less, for me to catch a trade like this or catch a trade like this, catch a trade like this on an uptrend. You're not going to do that on a 5-minute chart, unless you're going to catch a trade right here. You're going to catch this trade and have to participate in all of this drop before you get out. So, you might catch this trade way up here if your buy value is like 0.5%. And then now you're on the roller coaster. And that's really what you don't want. So I'm looking for this trade right here. This is a good trade. Up here, that's a bad trade. You know what I'm saying? So your buy value is very, very important, determining the entry point, because the entry is everything. You don't want to enter up here. You want to enter down here. So that's why usually with a volatile coin, I'll zoom in more and get on the 1-minute chart, because I can catch some of these downtrends. I can catch some of these down coins on an uptrend, and that allows me to trade more often and still have good quality trades. So for example, this red candle right here, I would love to enter on the bottom of this red candle right here and catch this. So you saw that I caught like a 9% trade. That's because I got in on a coin on an uptrend, because I'm zoomed in to the 1-minute chart, and not zoomed out on the 5-minute chart. I'm being more aggressive that way. Any of these, like this red candle, that would have been a good trade. Either one of the bottom of these candles would have been a wonderful trade to get into. This candle right here, great trade to get into, but you can't tell the bot to trade this candle, and not this candle on a 5-minute chart. You can't make that determination. You can do it on a 1-minute chart though. So if I want to be more conservative, if I want to put my bot on like vacation mode or something like that, then I'll zoom out to the 5-minute and maybe even the 15-minute chart to get more conservative, and really catch the bottoms. So this is a 15-minute chart, and I'm surprised this actually catches some trades, but so it would have caught like a trade right here. It would have caught this whole downtrend right there at these levels, and I would adjust it obviously for the 15-minute level and probably pull it back some. But each time frame is going to have its own language that you need to speak, as to what works best for that time frame. So you have to just play with it, and you can really see what your entry points and exit points are going to be there. Now, if you want to see what a different strategy looks like, you just once I show you how, you can go over here and let's say EMA spread. A lot of people like EMA spread. I'm not really that big a fan. I think EMA spread works okay on longer time charts versus shorter time charts. But here's your EMA spread. I don't feel like playing with the different numbers or everything, but you can just visualize based on your numbers what that's going to look like, where it's going to enter. It's going to enter on the left side. That's where your entry point's going to be. And I personally think I just can't get my entry points right on EMA spread. Honestly, I do think that EMA spread keeps you out of these garbage dumps right here. These avalanches, I think it can keep you out of there because it's not going to enter you into a trade once you set it up right. It's not going to enter you into a trade on the beginning of a slow bleed down. Let me see if I can put this at a respectable level at least, or something. So I don't know. Yeah, so like right here, it's not going to get you to enter at the top of this, the top of this avalanche right here. And once you set it right, it'll probably enter the trade on like one of these two green bars. Maybe I need to zoom in so you can see what I'm talking about. So What I've noticed with EMA spread, it'll get you in on this green bar. It'll get you in on this green bar. It'll get you in on this green bar. To me, I've already missed my up move. I've already wasted, some positive upward energy. If I'm trading on a green bar, I want to trade on a red bar personally. But that's what EMA spread is good for. So my opinion, it enters the trade either early or late for what I like to trade, but it will, once you set it up right, avoid this garbage right here. It'll avoid all of that. So you just have to play with it and make it yours, depending on how you like to trade, and see what works for you. I just didn't like it. I'm just trying to see if I can catch a respectable. I don't know. I just don't like EMA spread. Okay. I can't make it work for me. It keeps me out of all of the uptrends. You will never, I don't care what time frame you're on, you're not going to catch a coin on an uptrend with EMA spread, because for EMA spread to work, the fast line has to be lower than the slow line. And in an uptrend, the fast line is always above the slow line. So you're never going to catch a coin in an uptrend. It's always going to be on a downtrend. And I personally think it's hard to find the bottom with the spread. I think it's easy to find a bottom with gain, hard to find a bottom with a spread. So those are my two negatives against EMA spread, but you can visualize it. If you like spread, see if you're going to like, trading on this green candle right here. Are you going to like that trade? Are you going to like trading on this green candle? Notice it's always a green candle just about that it trades on, right? Are you going to like this particular trade right here? Do you like entering in on this candle? Do you like entering in on this green candle right here? Is that you? Or play with it and make it yours. Like, this is a 15-minute chart. I personally think spread works better on longer charts than shorter charts, but make it yours and see if you like it. But that's EMA spread. And let's take a look at low BB. Some people ask me about low BB. I also don't like low BB personally, and I'll see if I can illustrate exactly why. Value, length. Value, let's do like a -5 or something. Okay, so here's low BB. I did play around with at least testing low BB, and I couldn't find entry points that I like. It's another one that I like on longer term versus shorter term. I think it's terrible with like a 1-minute chart and pretty bad on a 5-minute chart, but I couldn't really get it to get good lows. This is actually not that bad. Now that I'm looking at it, it's probably one of the best that I've seen, but it doesn't trade that often. The thing about low BB, this is a great example right here, this particular area right here. So you see how the coin is very, very quiet, and then it gets a pump, and then the bands like blow up like a balloon, right? So what I noticed about low BB, the strategy, is that it likes to give a buy signal just before periods of volatility. Right before it blows up like a balloon, you're going to get a trade signal. Okay. Now it would have been great right here on this pump, but if it was a dump and it went the other way, you would have bought this right before the dump. And that's what I see more often than not, is that low BB buys right before a dump. Let me see if I can find a illustration of exactly that. So right here, here's a good example. So you see how the Bollinger Bands tighten up right here, tighten up, and then the coin starts falling off the map. And then you catch a buy signal on this candle, right? You'd like to think that it's going to buy on this candle, but no. It's going to buy on this candle way up here. And then you're going to participate in all of this. See how the Bollinger Bands, again, they tighten up and they squeeze, and then the lower energy causes it to fall down, and then it buys right at the beginning of higher volatility. That's I don't know how to get around that with low BB, with the low BB strategy. So I don't like that. And that's also why I don't really like Bollinger Bands. I don't use them as an indicator in the stock market either. So again, Bollinger Bands tighten up. As soon as they start to loosen back out, you get a buy signal. Would have worked out in this particular area, but I think EMA gain is better for that. EMA gain also would have caught, probably, if I set it up right, it probably would have caught this candle right here, or at least the bottom part of this candle. Low BB, to be fair, did catch this one, but I don't like it. It only, to me, it only caught that because of this high. If this right here wasn't there, then you would have caught an earlier candle. But again, this is a good trading coin. This is a good trading coin. So here we go. So you can see the Bollinger Bands tightened up. And then as soon as they started to loosen up again, you participated in all of this downstroke right here. So you're already in the coin for all of this right here. So you're sitting here waiting for it to get back to this level, and then now you're in DCA land for no reason because the Bollinger Bands tightened up. So I just don't like trading with low BB. I don't like it. I think you get much better entries with EMA gain. It's not perfect, but it's the best, in my opinion, of what you have. Here's another example. You're entering on this particular candle right here when you got much better entry points that you can get into down here. And I don't know, I'd have to see, maybe I can juxtapose the two indicators. Let me see if it'll let me. EMA gain, where's my gain? Okay, so yeah, dang, I gotta set it up. I gotta set it up the way that I would set it up, but maybe I'll do it for another video and compare the two best, strategies or something like that, as best as I can get them or something, and then have them go at each other or something. But let me just see real quick. Hopefully this is not taking too long to try. 1.5. Whoa, what is that? Okay. 1.5. Okay, what just happened? I don't know what that was. I don't know why I did that. 1.5. Let's see. Getting close. I don't know. It usually takes me longer to kind of analyze this stuff. Maybe 1.9 is what we're looking for. Close enough. Whatever. So you can see we would have entered the trade right here, and we would have. What do we probably would have gotten out on that candle. Yeah, we would have gotten out on this, 2 candles over, with low BB. Oh yeah, we would have gotten in way too early. And again, I'd probably have to play with this just like I just played with EMA gain. I'm probably a little bit biased or something. Okay, so there. Okay, so we would have gotten in, right here. So the same candle on this particular trade. So, play with it a little bit, but I don't like it. I'm comfortable with EMA gain. See, it's just another, I just don't, let me see. Would it be the same candle? So there's EMA gain, SMA gain, and there's low BB. So they're both telling me this candle. They're both telling me this candle. So what about this area right here? So there's EMA gain. We're gonna would have entered like right here, and then low BB. We wouldn't have entered at all. Okay. So I don't know. You gotta play with it. I prefer EMA gain for right now. If I get brave enough, I'll probably test low BB or something like that. But you can test it yourself. But EMA gain is working for me, and I don't even use 15-minute charts like that anyway. But test it out yourself. See what works for you. Now, briefly, I know this video is dragged on for a little bit. I want to show you how to get access to these particular studies yourself, and how to get the additional information on your profit trailer, both. Okay. So first thing you're going to need, this is for profit trailer, to add stuff like the, the dollar value, the percent value right there, the market cap up here and all of that. So first thing you're going to need is this extension right here, which is custom JavaScript Chrome extension. And that's it right here. You just go to the Chrome web store and then type in custom JavaScript, and they're going to have two of them. You're going to want the one without the number 2. So just custom JavaScript, not for websites 2, just for websites. Okay. Add that Chrome extension. Then you're going to go to the Crypto Gnome GitHub. Okay. And let's just go back. So this is what you're probably going to see. You got a few areas here. What you want to go to is community tools. You're going to want to go to profit trailer tools. Then you're going to want to go to web GUI add-ons. And then you're going to want, depending on which ones you want, they have them broken down into individual things. But I have the one that says all-in-one. And then click on all-in-one.js. It's going to take you to some code. All you got to do is copy all of this code. And it's pretty long. But just copy all of that in your, just right click, highlight it all and copy it. And then you're going to go to your profit trailer tab. You're going to click on the new extension that you just added. And then you're going to paste it and then hit save. And then it's going to refresh the page, and then you'll see all of this stuff show up. That's it. Okay. That's all you got to do for that. So what it does, like, it adds this market cap. It adds a few things down here. It adds stuff like the TradingView link. So that little cloud right there, that'll take you straight to TradingView for that particular coin. If you click on the coin, it'll take you to the advanced tab in Binance. So it does a lot of useful things. It adds this little chart thing there on your pairs. So it does a lot of useful things automatically. So that's all you got to do for that. And then for these indicators for your TradingView, how you get those is you're going to want to go to botindicators.com. See it, botindicators.com. It'll take you to this page. You're going to want to click on this right here. Oh, okay. It's just loading up. Okay, so there it is. And then there's all three. So you got SMA gain, you got EMA spread, and you got low BB. And then all you got to do is just click on it. Come on, Slowpoke. All right, once you click on it, you just scroll down. It'll tell you all about the indicator. So you just scroll down, and then you're gonna hit this little, okay. You're gonna hit this button right here. It'll say add to your favorite scripts. You do have to log in to your trading view for this to work. So add to your favorite scripts. And then once you do that, you come back over to your charts. You're gonna click on indicators. You're gonna click on favorites, and there they go, right there. Okay. Now I've got a few of them. I actually don't like these the best, but they're the most accessible, and they're on the chart. I do have one for my particular style of trading that puts something below the chart where that actually factors in trailing for EMA gain. But I don't know how to share that. But you know, you can use these. They'll be fine. You can see the entry points and everything like that. So that's how you do that. Really easy. And that's it, man. So this video is going on long enough. I hope you learned something. Please make sure that you ask any questions or leave any comments below. I'll try my best to answer them, and we'll try to keep everything up to date and try to get everybody making some money. So let's go. Let's get these gains, and Bitstream is out.